Well, joining me now live from the conference is George Magnus, Senior Economic Advisor at UBS. Thanks very much for joining us today. I suppose there seems to be something of a split now. We saw what the Fed said yesterday, that they weren't going to change rates for the foreseeable future. And there seems to be a bit of a split between the Obama opinion that everything's still too fragile and money still needs to be pumped in, and the austerity measures in Europe. Is that how you see it?
Yes. This is a bit problematic, actually, not least because it has an eerie historical parallel to the spat that actually opened up between the Americans and the Europeans in 1933 at a time of the London Economic Conference over exactly the same issues. I think it actually sets a rather kind of negative backdrop for the G-20 meeting coming up, because actually when you want unanimity of purpose and cohesive or coherent, I should say, leadership, as we had actually for the first two G20 meetings in September 2008, April 2009. We don't have it now, and I think that is a bit of a problem.
Now, of course, we're here today talking about the European sovereign debt issue. The real question, I suppose, is now that all the kind of fissures in the Euro plan have been laid bare, can we actually continue to have a euro without a common fiscal policy as well as a monetary one?
Well, I don't think so. I mean, I think there are at least two or three really important things which I think the European leaders actually have to agree on. The first is they have to get on with these bank stress tests and publicise them for as many banks as possible, as quickly as possible, and simultaneously actually have a plan to get the banks to recapitalise, because this is really the turning point in America's financial system, and the British and the Irish. And I think, the sovereign debt crisis, it is about sovereign debt, of course it is, but actually because of the way in which the banks are involved, it's also a banking crisis. So that's the first thing. The second thing is, obviously, they have to somehow agree kind of rules that make fiscal integration work, but they probably won't want to go all the way towards full fiscal union. Yeah. So who's going to get punished, how the penalty is going to be decided, these kinds of things have to be sorted out as well.
Well, we saw Angela Merkel having a tough time at home as the Germans blamed the kind of siesta states, if you like, for the fact that they're going to have to be working a lot harder too. Overall, do you think that that can remain together, and that countries like Germany and France will actually be able to bear the brunt?
Well, I think in the end, I think this is as much a German decision actually as it is anything else. In fact, my own view, I think, if the euro system is going to sustain itself, it's going to become more Teutonic. But there is a big issue about whether the German government or the German people are willing to basically play a bigger role in terms of helping the euro system work, which means that, the responsibility is not just on debtors to behave themselves in a more responsible way, but for creditors like Germany to actually take a view as well.
George, just before we go, there's a 14% risk of Greek default. That comes from the head of S&P this morning. Do you think that's about right?
I don't know any investor that I've spoken to in four corners of the world that doesn't believe that Greece is going to have to restructure, which is a polite way of putting it.
Okay, George Magnus from UBS, thank you very much indeed for joining us.